So jumping straight into it, I wanted to get into the top recession-proof stocks. And what do I mean by recession-proof? These are the top 5 stocks that did well during the 2000 crash, the tech bubble that exploded in 2000 of all the tech companies when it was a huge deal, and people were buying stocks just because it had the .com name and the company title, and it rose and soared and did amazing, and then it crashed because there were no underlying fundamental value of these companies. We had the crash in 2000, and these stocks did well. And since these stocks did well, we're going to assume that they'll also do well in previous crashes as well, proven in 2008, the slight decline in 2016, and hopefully if we have a decline in 2021, these stocks are going to be some that we want to look into. Anyways, the first stock is Walmart, stock symbol WMT. So why obviously is Walmart going to be good? Because Walmart is always going to be there. It's a store that's there and has everything at a discounted price. So they're not amazing at one thing, but they do have everything and at a cheap price. So you can always find a Walmart in your local vicinity. You'll always find stuff that you need there, food, clothing, items, toiletries, whatever you need, you can get that there with Walmart. And so because of that, it's just an overall good company. Looking at the stock, it trends well, as in over time it is choppy, meaning that the stock goes up and down a lot. But if you zoom out on a one-day chart over a year or 2-year period, the stock does start at the bottom left-hand corner of the chart and move to the top right-hand corner, meaning that the stock price does consistently go up over time. That's something that you want to look for in a stock. Not to mention, it also offers dividends, which is a very good way to make some free income in the U.S. Anyways, that is the first stock we want to look into as a recession-proof stock. The next stock we want to look into is DLTR. So Dollar Tree. Again, this is basically an offhanded Walmart, where it has everything at a very cheap price. And so, of course, it will be something we go to. Why? Because if we're in a recessionary period, people are making less money. And if people are making less money, they can't shop at Louis Vuitton, right? So we're going to see people go to cheaper stores, for instance, Walmart and especially Dollar Tree. So yes, this is a very choppy range-bound stock, meaning that this stock has definite highs and definite lows. It's trading within a channel, meaning that we have a top high range where all the highs meet, and then we have a bottom low range where all the bottom lows meet. So it trades up and down between these two ranges, but the channel is continuing higher. So if we zoom out on a one-day chart, we can see here that the chart goes from the bottom left-hand corner to the top right-hand corner. We have a lot of choppiness, meaning that if you are a swing trader and you want to find ways to capitalize on this stock, you can buy at the lower portion of the channel and then sell at the higher portion, which right now it shows that channel ranges at about a 50% profit margin. Looks like it takes about a half a year to get there. So you can have about a half a year swing trade to make roughly about 40% profit, which is a very good way to make some money. So Dollar Tree is definitely one you want to add to your recession-proof list, as well as your consistent trenders list, maybe for those swing traders. All right, stock number 3 that we're looking into is TJK, which is TJ Maxx. So if we're looking at the stock symbol here, overall we can see that it goes from the bottom left-hand corner to the top right-hand corner, and it does offer dividends as well. Guys, why is dividends good? So dividends is not the main reason you want to buy a stock. I go off on this on other videos, but a dividend is just a cherry on top, and it doesn't hurt to add a cherry on top of your sundae, right? And so TJ Maxx is, again, for the same reasons as Walmart. It's a discount store. And so if you need clothes and you can't go, I know I used this example already, but Louis Vuitton, you can't go to Old Navy, you can't go to the mall or any fancy place like that, then TJ Maxx will have your discounted clothes for you. And so that's a reason why it performs well during recessionary periods. And so TJ Maxx, stock symbol TJX, is going to be a great stock to look into during a recessionary period. Anyways, just wanted to side note here that if you enjoy this video or you're listening on podcasts or anyway, please smash that thumbs up button and subscribe, because I'm coming out with amazing videos every single week. Anyways, please stay tuned, because I'm going to share my top stock during recessionary periods when we get to the end of this list. All right, so looking into stock number 4, MCD, which is obviously for most people, McDonald's Corporation. So again, we do have a dividend as well. If you zoom out over a one-day period, it does go from the bottom left-hand corner to the top right-hand corner. This is a very consistent stock. You won't make a lot of money, but you will consistently make money with McDonald's, not Microsoft. So McDonald's is a great example here of stocks that just trend well and always go well. Why? This falls under the same category, right? Because if we're in a recessionary period, people aren't making as much money. Maybe they got laid off, maybe whatever. They still need food. People still need to eat, right? And because of that, we're going to be looking towards either stores like Walmart or Dollar Tree that provide cheap food, or people who absolutely don't want to cook. They're still going to need a way to get cheap food, and McDonald's is the way to do that. So McDonald's does well during those recessionary periods, the 2000 crash, the 2016, 2008, and then the slight in 2016. And so if we have one in 2021, there's no doubt in my head, especially that why do I keep saying Microsoft? McDonald's has now been expanding across multiple different countries that we're going to see it do really, really well in the next recessionary period. All right, the last stock here that we're going to mention is K, which is Kellogg's company. So again, this is a stock that did really well in the 2000 crash, but I have a feeling that it won't do that well coming up here anytime soon. What I mean is, I think it's kind of overdone its welcome, where like this stock was doing well, but the company has had many competitors step in since the 2000s, and it hasn't been performing as well. If we zoom out over that same period where we were looking at those other stocks, it looks almost like the lost decade, where we see that where the stock opened and closed at roughly the same price, meaning that over a 10-year period, it's made no money. And so Kellogg is kind of overstated its welcome, but it did need to be mentioned since it was one of the top performers in the 2000 crash. Anyways, so those are the top recessionary stocks from 2000s and ones minus Kellogg that are going to perform well, hopefully, and if we have a recession in 2021, 2022, sometime soon, since we're putting money out the wazoo. Anyways, the top stock that I look into is SDS. Why? Because it is a direct inverse. So for those who don't know what the S&P 500 is, it is SPY, which is an ETF that tracks the S&P 500. It tracks the overall market. So as long as the market is doing well, the market is positive, you'll see the S&P 500 go up. And so SDS is a direct inverse, meaning that when a market crashes, when we have a recessionary period, and you look at the news and they say markets are down 12%, markets are down 200 points, whatever you want to see, then you're going to see SDS, which is the inverse of that, go up by that amount. You can see here during that little small crash that we had for COVID back in March, you can see here that the market dipped and SDS went up over 35% in a matter of 2 weeks. And so we can use this ETF to quickly make money on the downside and also protect our portfolios. All right, guys, thank you so much for watching this video. If you want to have the exact game plan for any stock, for instance, you want to know when to buy SDS, you can go to the Impeccable Stocks software, start your 14-day free trial using the link below. And what you do is you type in the name of any stock, and it lays out the exact game plan, where you should be buying, why you should be buying, where you can get the lowest risk and the highest reward for every single stock. Also, if you have a hard time finding stocks, there's a screener with default searches that helps you find these amazing stocks. All right, guys, thank you so much for watching. Again, if you haven't already, smash that thumbs button and subscribe, and I will see you in next week's video.